right, good morning, everyone. We'll give it just a minute or two here to kind of let everyone join in before we get started. Okay, I think we can go ahead and get started, and a few more people might trickle in as we're kind of introducing everything here. So, good morning, everyone, and thank you for being with us for the first 2024 episode of the BWC Dialogues. Over the past year, this has become a platform for our members to share their opinions and ideas on real-time events, and we want it to continue being a vehicle for you all to be part of these peer-to-peer conversations. As such, please feel free to reach out to me to pitch topics or volunteer to be a speaker. I would love to work with you on making that happen. We're very excited to host today's conversation on AI and the future of money. But before we dive in, I want to introduce our two speakers. We are joined today by William C. Dudley, BWC Chair and former President of the New York Fed, and Michael Greenwald, the Global Head for Financial Innovation and Digital Assets at Amazon Web Services and former U.S. Treasury Attaché to Qatar and Kuwait. Thank you both for being here. I will come to you in just a moment. But before we do a bit of housekeeping, there will be plenty of time for questions at the end of today's conversation. I will ask you to put your questions in the chat, at which point I will go through in the order in which they're submitted and ask you to unmute yourself and ask the question to our speakers directly. I think that's everything. So Bill, over to you.
Okay, thank you so much. And thank you, Michael, for being willing to join us here today. The title is AI and the Future of Money, but I'm going to actually revert the order and we'll talk a little bit about the future of money and then figure out how AI fits into that process. So starting with the future of money, where do you think we're headed? And we have cash, we have credit, debit cards, we have stable coins, we have cryptocurrencies. We're on the road to getting central bank digital currencies. Where do you think we're headed? Michael, you look like you've frozen.
I'm unfrozen now.
Yeah. Okay, good. Did you hear my question?
I did. So I think, Bill, it's great to be with all of you. Cloud underpins the future of finance and money, which really provides a foundation for AI, which we'll get to, and digital assets to operate. What's fascinating is that the convergence of these two emerging technologies, AI with its ability to self-learn and extract actionable insights, from vast amounts of data, and digital assets with the future of money, which you alluded to, which exists on a decentralized, transparent and automated network. They're expected to further amplify the impact of one another. And so, I really see where we are right now as we enter 2024. We're at a digital asset inflection point where it illustrates that there's a growing demand domestically and globally from businesses, from consumers, governments to reduce their reliance on a single currency or economy to promote economic stability. And resulting from this really is a moment in the years ahead, which will evolve to be a basket of currencies, something that I know you're quite familiar with, approach in global finance. And so what I see is there's going to be this interaction between stablecoins, CBDCs, cryptocurrencies, and fiat currencies. And that economic landscape today is evolving rapidly with the emergence of various fiat currencies, CBDCs, cryptocurrencies. And what's really interesting as we're watching this play out, especially going into this new year, is that each represents goals or priorities set forth by the issuing body.
So you don't have a strong, is your view that we're sort of going to run the race and see what sort of emerges? I mean, do you have a view of which horse you'd want to back in that race?
Well, I think that we're in such a, these trends, as I note, they denote such a larger shift to a diversified world economy where there's so many different types of decentralized and state issued that they will likely live alongside each other. There is a race occurring. The dollar is still in the mid to high 50s, but there is growing competition. So I think that governments have, as we've noted, and as the Atlantic Council has observed in their CBDC chart, governments have sped up their exploration of central bank digital currencies, and they've done this to increase efficiency, decrease transaction costs, and to speed up settlement times. But the continued and future operation of a CBDC and stable coin, which will be integral to that financial system, that financial architecture of tomorrow, that's going to require the expansion of resilient and secure cloud infrastructures. And so where I sit, regardless of whether the architecture is centralized or based on a distributed ledger template, it's that resilient and secure cloud-based infrastructure that will be at the heart, that will underpin that future.
So sitting at Amazon, your view is fairly agnostic, I take it, in terms of like who's going to win and who's going to lose. Our job is basically to create a technological platform that's resilient, stable, consistent with low financial instability risk, I assume.
Yeah, we're agnostic. We work with many different customers in the centralized and the decentralized community, and that gives us a unique perspective of the customer, domestically and globally, and understanding where the customer and the consumer is going.
So which component of the, we talked about CBDCs, stable coins, traditional bank money, where are you getting the most sort of inquiry in terms of Amazon's business? I mean, is it across the board?
It's across the board. It's a diversified business, and it's across the board, and there are teams dedicated to each part. And so from my seat, working with the public sector and seeing what's happening with the digital asset executive order, and now with the AI, executive order, what will be unique to see is how we're ushering in an era of responsible innovation, not just for digital assets, but for the convergence with AI, which we'll get to.
So on the future money, do you feel like you're getting the guidance that you need to run your business at Amazon, or do you, or could the regulatory and supervisory community provide more, and should they provide more?
So I think that, and this coming from the New York Fed, I think we're always looking for more guidance. There in coming from Treasury and looking at the number of illicit actors that are operating in the space, I think more guidance, especially in this new era of financial architecture and future of money, is very welcomed. I have the fortune to sit on the CFTC Technology Advisory Committee, and I really appreciated the opportunity under Commissioner Romero, which had just released a report on decentralized finance, to bring in private sector perspectives into that conversation. So I think the guardrails are starting to formulate. I think more data is coming in to formulate, and I think it is welcomed because I think public and private want to be able to operate in a transparent system.
Do you think the public sector has the technology technological expertise and the people to interact with the private sector to get this done? Because I always worry a little bit about that private sector can pay more, it's more exciting. And so people like, like you were in the public sector, now you're in the private sector. Do we have to worry about that kind of brain drain out of the public sector?
Well, I think it's positive to be able to spend time in both. And I speak to a lot of former, Treasury colleagues who are in different parts of the industry now, and some go back and forth. And I think there's a shared knowledge and a shared information cycle, which we have to keep. I think what the administration is doing with the AI executive order and bringing in chief artificial intelligence officers in each agency and the website they've put up is a very positive sign. But we are in a race for talent. We're in a race for talent in the future of money. We're in a race for talent in AI. And I think it's important to harness it as much as possible. But even when you do leave government, be able to have vehicles to share that knowledge because it's a competitive race.
So if you look at the U.S. competitively, U.S. is pretty well positioned from an AI perspective. Doesn't seem quite as advanced from a future of money perspective. How would you assess where the U.S. is in all of this?
Well, I think that it's important not to be complacent, as you know, with the dollar, and we've got a great privilege with the U.S. dollar. And I think that most central banks are watching the moves we take, especially with regards to what's played out in the last couple of years. I still think that the United States is a leader in the future of money. Just the fact that Bretton Woods is an institution, and the moves that you're making internally, that is important. So I think that the dollar still being in the mid 50s plays a very important role. I think we have to keep an eye on the other currencies. We have to keep an eye on what consumers are asking about, what their appetite is. SWIFT is making great strides to create a chapter 2 and 3 for SWIFT and for greater rails. So I think that the United States is still seen as the global leader. We just can't be complacent about that leadership role.
How do sanctions sort of filter into this? Because the sanctions are sort of pushing in the opposite direction. They're giving other countries an incentive to develop their own rails. Do you worry about that we're over relying on sanctions and has some unintended consequences in all of this?
Yeah, I mean, putting my previous Treasury, hat back on, I think it's always been a concern about sanctions risk and how targeted are financial sanctions. And we've seen, multiple iterations of sanctions with Iran and Russia and with Ukraine. And so I think sanctions overuse certainly has the potential to drive a diversification approach. But I think we've seen that from authoritarian countries in years prior, and this has just been exacerbated. So I think what's important is the US and the G7 coming together in a much more concerted way to have a targeted approach against illicit actors to create transparency in the financial system. But certainly multiple administrations have been studying this, but also sanctions are a great tool. So I think the question moving forward is, how does the scalpel of sanctions become more targeted? And how do you adapt to an illicit actor that continues to get smarter, that continues to operate outside the formal channels? I remember post 9/11, Al-Qaeda moving money through Hawala in the early days of the Hawala system and that decentralized finance. We as a government, we as a financial system have to continue to adapt, and that scalpel-like approach needs to get targeted and more smart because the illicit actor is watching our moves very closely.
I mean, what I worry about is that the two sides are not necessarily hooked up. The people just making the decisions on sanctions aren't making the decisions also on the dollar as a reserve currency, and you need to make that decision sort of jointly across those two regimes.
I think that there are, I know the administration is focusing on greater information sharing between public and private sector with the banks. And I do think that's a positive move because the private sector does have good information on the banking side, as you know very well, to share with Treasury. And so just like 9/11 brought about greater information flow between the US agencies, we need to rely on greater information show between public and private.
Agreed. Let's pivot to AI now. So we've established that there's a lot going on in the digital finance world. Not really sure who's actually going to run the race. Technology providers like Amazon are going to be very important factors in providing the sort of technological infrastructure to support this activity. So how does AI relate to digital finance?
So, AI has and will be used in impactful ways in the financial industry. Um, I see this increase in traction and popularity. I see it really being driven by increasing accessibility to data, dropping a cost to store data, and increasing computational power. And so the use of AI spreads to other areas of finance, such as fraud detection, which we were just talking about, consumer credit scoring, and customer service. So with the increasing accessibility of foundational models, and for us, it's Amazon Bedrock, right? They are now able to power generative AI, revolutionize the financial industry. Now, the convergence, as you mentioned, of these emerging technologies, AI with its ability to self-learn, extract actionable insights from vast amounts of data in digital assets. They exist on a decentralized, transparent, and automated network, and that's expected to further amplify one another. So really, I would point out a couple ways which both technologies could be leveraged within the financial sector. And that first starts with data access and analysis. So what I see is in order for AI to be effective, the most important thing is a trusted source of data. It needs to be accessible and on demand. Digital assets, which use blockchain technology, they allow financial transaction data to be stored in a trusted, accessible, and transparent fashion. So you see that logical convergence. AI can access such data as transaction history and current balances for real-time financial analysis. So that's the first part on data access and analysis. The other part is security, which is so important, right? As we move forward, the illicit actor grows smarter, and we have to use AI really in a secure perspective. So I think that is really where increased automation, digitization, cybersecurity takes on greater importance. The cyber threat of 5 years ago is a different cyber threat that is today. So AI can monitor transactional data in real time, identifying and flagging unusual activities. Unusual is different today than it was 2 weeks ago. And that's what's one of the key things that I see that convergence taking place.
So it sounds like you think that it's much more dynamic and therefore it can sort of ramp up to a higher degree of effectiveness much more quickly. It also sounds like you think that the data set could be potentially a lot larger in the digital distributed financial world than currently, where banks have this data, it's proprietary to the bank. Nobody can actually see into what that data flow is except that bank. If the finance is decentralized, presumably the AI can access a much broader set of data. And I guess you're also arguing that if AI can do this, it's also going to create a competitive advantage for structuring your business in a decentralized way, because you're going to be able to participate and get those benefits. So you're sort of arguing that the whole thing are sort of self-reinforcing. Am I putting words in your mouth, or is that what you're saying?
Well, no, I think that's right. I mean, I think you look at advanced, machine learning algorithms. they can predict, future attack vectors, which is incredibly helpful for creating a transparent financial system. And that's based on existing patterns. And that provides an additional layer of cybersecurity. And that additional layer is really important. So as foundational models get trained on trusted, and trusted is really important, trusted digital asset transactions and smart contract code, on blockchains, generative AI, they can help developers write more secure code. And so just to give you an example, technologies such as, Amazon Code Whisperer, they're speeding up coding tasks. They're providing inline code suggestions to improve developer productivity. So in addition to these code suggestions, Code Whisperer, they can detect hard to find security vulnerabilities. They can flag those emerging security vulnerabilities during development. And so that is where the reimagining of the risk assessment, the reimagining of what transparent, financial, secure architecture can look like moving forward.
I mean, it sounds like you think that the way this is set up, AI can make the evolution of the decentralized thing go at a much faster pace over time relative to the existing way of doing business. So that's how there's a synergy between the two going forward. Anything we need to worry about in the AI, as playing a role here? I mean, you're also being very reliant on a model.
Well, I think that the recent executive order on responsible innovation, which we signed on with the White House to that new era of responsible innovation, that's incredibly important. And so I think as we move forward, we have to keep in mind the importance of trusted data. We have to keep those conversations under the umbrella of the executive order, key and front of mind. But I think when you look at the convergence bill of AI and digital assets, it could bring a paradigm shift in financial infrastructure. And that brings real more competitiveness to the United States and the US market. And so the mutually reinforcing advancements of AI, digital assets, they have the potential to democratize financial automation, enhance efficiency, and they can significantly ramp up security protocols. And so that's part of that era and that umbrella of responsible innovation. And so really it's envisioning a future where AI is processing both on-chain and off-chain data, but that's going to require a new infrastructure to cohesively function. And so, we touched upon future of money. We touched upon decentralized, finance applications. Their front-end user interfaces are built into smart contracts. They're enabling transactions to run without sharing personal information between the parties. Now, generative AI tools, they can be trained on both off-chain and on-chain to optimize the security of those smart contract ecosystem. Now, today, generative AI assists smart contract parties through, chatbots and virtual assistants and the writing of smart contract code, and they can monitor any unusual network that may represent a security risk. So you'll see a scaled up version as we move forward in this new era of financial infrastructure.
Do you have a view of how fast this is going to move?
I mean, I think it's rapid. And I think that the more data that these generative AI tools have access to, the more effectively they're going to spot errors and security risks, enhancing their ability. So I think that you've seen the speed that the White House wrote the executive order. You saw how quickly the UK put together their summit on AI, and you're seeing the guardrails come into place. So I think you know very well, and we know from being in government, it takes a long time to put together an executive order. The fact that this got put together so quickly, I think, speaks to the moment. It speaks to the speed and the importance that we're moving forward in a responsible way.
What do you think needs to be done that hasn't been done to this point? I mean, what are sort of like the next steps in the chain moving this forward?
Well, I think there are still challenges that need to be solved. Innovators, armed with more powerful, accessible, cloud technologies, I think is very important on that resilience side. Building for machine learning, I think that's going to be very important to getting the benefits. So I think it's first having the foundation of resilient and secure cloud. And then once you have that resiliency, you have that education throughout that workforce, then you can build on that through generative AI and the tools. So I think you need that foundation in place and that recognition that the threat matrix has shifted, and the recognition that financial infrastructure is shifting and changing. And so it really begins with that cloud-based network.
I mean, obviously in finance, trust is really important. So what I'm hearing you're saying is that by having a secure cloud-based network, you can make people confident in the technology, confident in the platform. Therefore, they can have trust, and therefore the innovation can sort of proceed. I mean, last couple of years, it's been a little bit more the Wild West in some of these digital asset spaces. So
It has, and I mean, several of our customers like Chainalysis and TRM Labs and Elliptic, they've been the due diligence of this space, and the IRS has made great gains in clawing back a lot of this illicit activity. And so I do think it's important to call out the illicit actors, to call out what's happening, so you can have transparency, but also so you can rely on trusted data. And that's going to be paramount. But we've seen that, Bill, in other industries. We've seen that, throughout time, whether it's in the art space or in the equestrian space where there's lack of regulation, you're going to see illicit activity. But you have to be able to call that out and to create transparency at every turn.
let me ask you about two sort of issues and have you comment on whether we should be concerned about them. First is cybersecurity. So it sounds to me like we're going to be putting a lot of eggs in one basket, and if the basket is safe, then we don't have to worry. But do we have to worry about the cybersecurity risks associated with this evolution? And two, terrorist financing. I mean, that's obviously still an ongoing problem. How can we use this to sort of be more effective in dealing with the terrorist financing problem?
Well, I think terrorist financing is an ongoing problem. Again, wearing my previous hat at Treasury, I think illicit actors operating outside of formal, centralized banking channels creates more of a challenge to our intelligence and to our national security apparatus. So our tools need to get that much smarter, that much more adept in understanding, how the illicit actor is moving. But I go back to the early days of Hawala, right? I mean, that's how Al-Qaeda used to move money, and they still move money through decentralized financial networks, right? So I think we have to take some of the steps we did, but we're also getting much better from public and private sector solutions to go after it. It is costing less money to conduct these attacks. We've seen that gone down since 9/11, from 9/11 to London to Boston, marathon. So it keeps going down. And so that does create vulnerabilities. But that's where the transatlantic relationship between the United States and Europe and our G7 partners and that sharing of information, not just country to country, but private sector to private sector and central banks, those type of relationships, FIUs within the FATF network are incredibly important. As I mentioned before, security, cybersecurity takes on such a greater importance. And that's where I really think the convergence with AI can really be helpful, flagging unusual activity, and again, reimagining what the risk assessment looks like. And I think the traditional risk assessment, when you and I were both in government, is shifted. And so it's being able to use these tools in a responsible way to spot unusual activity, but reimagining if the risk assessment has shifted and being able to call out and to predict that activity at a much earlier stage to get ahead of the illicit actor.
So hopefully, as we go forward, patches, problems will be identified sooner, the patches will be implemented quicker, and the opportunity set will be more diminished for the bad actors. Going forward, anything you would like to see in terms of governance and standards that we don't have yet? I mean, if you were sort of saying next steps, this would be a good governance step to take. This would be a good step for setting, international standards.
I think what Bretton Woods is doing on a domestic and global stage, bringing these issues to bear and working with your former and current colleagues is incredibly important. So I think that more that can be done between not just the central bankers, but institutions like Bretton Woods that continue to shine a light on issues that are going to recur is really important. As you and I both know, in government, everything's at a rapid pace in responding. So the more that we can create an environment where it's not reactive, but it's proactive in understanding what that framework looks like. And I think we just need to listen more to the consumer and understand where the consumer is going and understand what that looks like for central banks and their customers and being able to adapt quicker. And I think that's what SWIFT has recognized in the last couple of years, is that the rails need to be quicker, faster, more secure, less expensive, and more accessible. And so those are some of the things that I think we need to continue to highlight in a growing competitive environment.
So we had a pretty broad discussion about future money and artificial intelligence. I want to just open up. I've been asking a lot of questions, but just let you state your final thoughts. Like, what are the things that you'd like us to take away from our conversation today? The final few points.
Yeah,
questions.
So I would say what I'd like you to take away is that we're entering a new era of a new paradigm of finance and financial architecture, and that really begins with a secure and resilient cloud-based infrastructure. And moving forward, that's going to play an even more important role as it converges with AI and the ability for organizations to use that. And so whether it's fiat or decentralized, it's infrastructure and it's trusted data. And that is going to be at the heart, and cloud is going to be at the heart of underpinning the future of finance.
And I assume you think that this is inexorable at this point. We've already passed the tipping point, and this is going to happen. It's just going to be a question of, do we do it well or okay, as opposed to it's not going to.
I think the diversified world economy we've seen those data points pick up, pre-COVID, during COVID, and now. And so I think what we're going to be seeing in the coming years is the playing out in the businesses of what a basket of currencies actually looks like, what a diversified world economy looks like, and how do we respond to it in a smart, secure way so that in the diversified world economy, we shut it out from illicit activity.
So just making sure that the regime works well. It doesn't have any unintended consequences or bad unintended. There'll be unintended consequences, but we just want to rule out the bad ones, presumably.
Yeah, and that's where I think if you look at the two executive orders, the fact that the phrase responsible innovation was used in both executive orders is really important to note. And so how do we move forward and innovate responsibly?
Okay. Why don't we open up to the audience?
Yeah, it looks like we have a question from Mahesh, and then we'll come to you, Teresa. So Mahesh, let me ask you to unmute yourself.
Thank you very much. I am impressed with the cross-fertilization of the public and private sector that you represent, Mr. Greenwald, and thank you for your presentation. I have two questions. One is, have you seen instances which you can perhaps point to, maybe not in detail, where AI tools have been used to unearth cybersecurity or AML CFT threats in the past? Obviously, the future is out there, and we can see that possibility. Second, do you see Amazon itself accepting new money, crypto, or CBD? Well, we don't have CBDC yet, but possibly stable coins or transfers of exchange-traded funds to your account. Thank you.
Thank you for the question. So as I mentioned, I think a key part of the convergence between AI and the future of money is going to be that increased automation and that digitization. And so, yes, cybersecurity and going after illicit actors takes on greater importance. And so, using AI, models and systems to monitor transactional data in real time, identifying and flagging, unusual activities. And again, it's reimagining what unusual is, I think is going to be really important. And then I think also it's going to be important to, look at one key one is Amazon Code Whisperer can detect hard to find, security vulnerabilities and flag emerging security vulnerabilities during development.
Do you worry that, Michael, if I can interject, do you worry that there's going to be a little bit of an arms race between the good guys and the bad guys? So the good guys are going to be using AI to make the system more secure, but presumably the bad guys are going to be using AI to try to find the vulnerabilities in the existing regime.
Well, I think, that's where advanced, machine learning algorithms can predict future attack vectors based on existing patterns. And that's where it provides an additional layer of cybersecurity. And so, as I mentioned, as foundational models get trained on that trusted digital asset, transaction and other transactions and smart contract codes on those blockchains, that's where generative AI can help developers create more secure code. And so that is going to be really important as we look forward in that future financial infrastructure.
Great, thank you. It looks like our next question is from Jeffrey. Jeffrey, I'll unmute you to ask your question.
Thank you very much. It's been very interesting hearing about the structure. My question is, where do you think financial regulation should be going in this regards? A number of regulators in Europe are far more conservative than the US regulators. So I imagine you're going to have to think about regulation, which works both in the US and worldwide. So how do they do that? How do they put the parameters around that for a considered regulatory framework for the use of AI in financial activity.
Sorry, I was having a little hard time hearing you. Can you repeat the question?
So I think the question was basically, how do
Okay.
you regulatory structure to make sure that that the AI is used sort of responsibly in the financial industry?
So I think, again, I think two examples, and thanks for the question. One is the two executive orders that came out and being able to get guidance from those executive orders on what responsible innovation looks like, and for that to continue to be clarified moving forward from the federal government. The other, is the opportunity to sit on the CFTC's Technology Advisory Committee and to be part of those conversations with regulators in real time and to put forward where they see the space going. And that's very helpful. But, I think it's going to require more guardrails in the space. And so we're not going to get ahead of those guardrails.
All right. That looks like all of our questions for the moment. So reminder that if you have a question, to go ahead and drop it in the Q&A chat, and we can come to you and or you're welcome to raise your hand as well.
Well, let me ask you a question, Michael. So obviously this is going to ultimately be a play on the global stage. Are there some countries that are doing better at this than others, and who are they, and what are they doing better?
I mean, I think that we're certainly in a competitive race, and I think we've observed, countries like China, obviously trying to use, their central bank digital currency in one realm, and that is expected given the tone they've taken in their population. I think if you look at some of the work that's come out of the Bank of England and BIS, they have been very impressive in looking at this and understanding where their population is going. And as you know very well, that's following Mark Carney's, Jackson Hole speech. I think when you look at some countries that are more used to environments where they're cashless, and so they have more experience dealing with cashless societies, they will be quicker to adapt to this new diversified economy. Christine Lagarde is obviously in Europe looking very closely at what a digital euro could look like, and they're making advancements. So I think those are some of my observations. But I still think that all eyes are on the United States, and all eyes are on, what moves we make. And I think it's important to note that you don't need to be the first mover, and that you can be patient as things are moving and get more data and understand the consumer and where it's going. And so I do think sometimes there is unfair criticism that we're not moving fast enough. I think it's more important to get it right than to move fast. And I think the stakes are high. And I think that when you are the global reserve leader, you do have a responsibility to really do your homework and to really make sure that you're operating soundly, but also talking to your allies and observing what your adversaries are doing to stay ahead of the game.
It looks like we don't have any more questions. So I think all that's left is to thank you both very much for your time today. And we very much look forward to seeing you all again here for the next episodes of BWC Dialogues.
Thank you.
Thank you so much, Bill. And thank you, Bretton Woods, for having me.